Hey, welcome to the 40 Finance channel, everybody. The third quarter earnings have certainly been interesting across the board. We've had a lot of surprises. And what I want to do today is look at some of the stocks that have fallen after their earnings reports and check in with Morningstar to see if their fair value has changed at all. There's always a reason why stocks fall after earnings. It's typically because they either provide lower guidance in the future, or frankly, they just did not hit their earnings targets. So whenever either of those events happen, it's always a good time to go back in and kind of reevaluate the trajectory of a stock, see if it's going to hit numbers that you thought it would, say, over the next year or so. So we will compare some of these sinking stocks with their Morningstar value and see if there might be some buying opportunities in here. All right, let's kick things off with Amazon. If you missed the news, Amazon missed their EPS target by over $2. I, for one, was extremely surprised by that. And right now, they're minus 3% on the day after earnings. I saw it as high as minus 4% at different times over the past 12 hours or so. And with Amazon, it was sort of a two-edged sword in the sense that they missed their earnings target, the Wall Street earnings target, and they talked about rising expenses heading into the holidays and how that's going to affect future earnings as well. So while Amazon is down right now, I got to tell you, I'm shocked that it's not down even more. Now, I have no plans to sell my few Amazon shares that I have, and I have mentioned on a live stream earlier this week, if things do go south, let's say closer to the 3,100 number or something like that, then I would consider adding another share of Amazon at that price, of course, for the long term here. But let's take a look at Morningstar and see if they adjusted their fair value for Amazon. All right, here we are on the Morningstar site, and they have done an update here. Wage and shipping inflation crimping Amazon's near-term margins. Fair value estimate down to 4,100. So if you go by Morningstar's valuations, then Amazon, they have here currently at an 18% discount, fair value of $4,100. Now, keep in mind with Morningstar, fair value is not necessarily a price target. They're not saying that this stock is going to go to $4,100 in any certain amount of time. They're just saying on their calculations, this is what the company is worth for investors today, particularly those with a long-term outlook. So if you do go by fair value, then potentially a discount to be had for Amazon stock, despite the recent bad news. All right, next up is another stock I own, Visa. And Visa, similar to Amazon in some ways, except for one, they hit their earnings numbers here in this past quarter across the board. But just like Amazon, they warned against Q4 potentially coming up short for a myriad of reasons, mostly because they're not running back to the full bar of 2019, which I think is acceptable. But they also cautioned one of their major sectors, which is cross-border transactions, may not come back to par until like 2023 or 2024, and that made some investors nervous, so you had a little bit of a sell-off. This is a 1-month chart. So here on October 26th, you're about $232. You see the cliff here. It fell down to 209. Let's see what Morningstar thinks about Visa. Okay, and we have a fresh update here on October 27th. You see off to the side, fair value $215. And they don't talk much about the earnings report, but they do talk about the antitrust investigation from the Department of Justice with fintech companies. If you're not familiar with the background there, the DOJ is investigating on whether Visa used its position to sort of incentivize PayPal and Square and some other companies to use their rail system, as opposed to perhaps some other smaller competitors It's an interesting take by Morningstar because I've read it. I'll just summarize it for you. They bring up the point that it'll be hard for the DOJ to really do anything about this, but we could see some fines come through, and in that case, it would obviously affect some of Visa's profits on like a one-time basis. But ultimately, this investigation, in the view of myself, is not something to sell off on, but you do have to ask yourself about that cross-border travel. I'm not selling my Visa shares, and with a fair value of 215 right now, and I'm looking at the ticker, we're at 212.59. So a couple bucks discount for Visa. I do think it is a good time if you've been thinking about Visa to get in, much similar to Amazon, right? If you wanted to maybe at least start a position and then see if there's opportunities to average down, if we have market weakness, etc., then this is a fair starting point, if you will, as it relates to the fair value. All right, next up we have Apple, who of course talked about supply chain problems that they're having, which has held back some of their inventory on their popular products. I believe the quote was they lost about $6 billion from inventory issues, supply chain issues, things like that. And it doesn't look like Apple came down much. They had a run up prior to earnings. See here at 152, 153. They dropped to 148, so it is a drop of 2 or 3% here, but it really only takes you back to what looks like maybe October 19th, somewhere in that range, 18th or 19th. But it is a dip, and there is negative sentiment surrounding Apple, and I think the harder thing when it comes to Apple is just the argument that maybe it's been running hotter than it has historically in the past. So let's see what Morningstar thinks about it. All right, and we do have an update here. Fair value is 124 on Apple. And you see this headline, Apple not immune to supply chain constraints. Despite solid fiscal Q4, no change to the $124 fair value estimate by Morningstar. So, depending on how you're looking at it, Apple is running at about a 20% premium right now to its current price. So perhaps if you're looking for a buying opportunity for Apple, this may not be the one that you're looking for, at least from the perspective of Morningstar. It insinuates, you might see some pricing coming in under the 150 mark at different points through the next quarter. All right, shifting gears a little bit to maybe companies that don't have GAAP earnings, EPS, things like that, but they've still been decently rated on Morningstar, so I want to tackle those. We have Twilio kicking things off. I do not own this stock, however, I do follow it, and I know that it's very popular in certain stock market investor circles. This one really fell off a cliff. October 27th, you're at 345. Down to, looks like 284 or so, might have been the low. And with Twilio, this is a revenue story. Okay, this is a compounding revenue growth story. You can see even on this Yahoo page, there's no PE to speak of because there's no positive EPS. And that's always interesting to look in Morningstar sometimes, because typically they're going to run off a foundational analysis much like myself, and they're really going to benchmark towards an EPS. But on companies like this, every once in a while you'll see Morningstar like the trajectory that they're going in and give them a higher fair value than you actually think they would get. All right, let's see if we've got an update here. And we do, October 27th. Last close of 285, fair value 388 for Twilio. Slowdown in organic revenue growth overshadows solid results, maintaining our $388 fair value estimate. Very interesting there, and I'll give you some background on this fair value because it is interesting for a company that's not technically profitable. And you can see where they're getting this calculation, implying a 2021 enterprise value sales multiple of 22 times. Within our base case scenario, we expect revenue to grow at a compounded annual growth rate of 38% through 2025. This growth will be the result of increased usage as well as increase in new customers. We anticipate growth at 23% over the next 5 years. That's customer growth. And then finally, while approximately 75% of Twilio's revenue is currently use-based, the expansion of solutions API offerings should help increase enterprise client penetration and support recurring revenue. So if you've had your eye on Twilio or you've been reading about it and you feel good about their bull case going forward, certainly looks like this might be an opportunity. Now you may have to hold for 3 to 5 years. Certainly when you're referencing fundamental analysis like Morningstar, that is an expectation, is that you're going to be holding long. But at 286, you've got a $100 buffer to its current fair value. All right, next up we have Snapchat, which is another one that on paper wouldn't feel too much like a Morningstar stock. Again, you have very low EPS. You're mostly growing a user base and you're mostly growing revenue with this story. And if you missed it, Snapchat came out and they were an early earnings report release in the sense that they came ahead of the Facebooks and Apples and such. And they talked about how the Apple privacy blocks have impacted their ad revenue to the tune of like 20%. So relatively big number there. And no surprise, because the stock was running hot, you had a huge cliff that it fell off of. October 21st, you went roughly $75. And then it looks like the bottom is still kind of falling here, 52.68. In fact, today might be the bottom, at least in this 1 month chart. So Snap coming in at 52.58. Let's see what Morningstar thinks from a fair value perspective. All right, here we go with Snap. And you have fair value of 70. We're under $55. Let's see what the headline here is. Snap reports mixed Q3, provides disappointing guidance, fair value to 70 from 74. Snap posted mixed third quarter results, slightly missed on top line, but beat bottom line FactSet consensus. While user growth was better than expected, user monetization was disappointing. We believe advertisers displayed hesitancy in purchasing ads due to uncertainty surrounding ad performance measurement brought on by Apple's changes as well as some supply and labor shortages. We think Snap, its peers, ad agencies, and ad techs will address the Apple issue. While timing of the solution regarding supply chain remains uncertain, Morningstar's economic projections are assuming that macro environment will return to normalcy for Snap and advertisers. So long story short, short-term advertising measurement pain that Morningstar at least expects these tech companies to solve. I tend to agree with that. I'll tell you, with Snapchat, it was a stock that it was really hot on my radar. I was looking forward to this Q3 revenue. And it's sort of right up my alley to buy it right now. I'm just having a little bit of nightmares from Pinterest and Twitter, which are other sort of standalone platforms that are really struggling right now. Although I will say Pinterest is struggling from a growth perspective. They continue to do well in an earnings perspective. The only problem is a lot of the valuations in today's world are wrapped around earnings. So if you stack Snapchat up with Pinterest, it's kind of a funny story, because on the one hand with Pinterest, you have everybody saying, yeah, profits are good, but user interest or user growth is declining. Then you put it against Snapchat and you say user growth is exploding, but gee whiz, the revenue and profits are not there. So quite a conundrum when you stack those two together. I would lean more towards Snapchat, and I don't mind this price at 52. I just need to think about it a little more. I don't have that full conviction yet. All right, investors, so those are 5 stocks that are definitely facing pressure in the stock market right now. But, generally speaking, I would say 4 out of the 5 are still under fair value in Morningstar's world. Apple was the only one that really wasn't, and it was only off by $25. Then you had Visa that was riding right at the line of fair value. So depending on your perspective and how you think the stories for these stocks will continue to go forward into next year and the years after, could be a buying opportunity for some of these names. All right, so are you guys buying any of the stocks mentioned here today? Let me know in the comments. And as always, please subscribe to the channel, like the video, all the things. Really appreciate your support. We'll see you on the next video.